Hey, welcome back to Midas Letter Live. I'm here with my co-host and super friend, Super Steve Misener, CFA extraordinaire, former fund manager, bon vivant, man about town. Steve, thanks for joining me again.
Thank you.
So we've had a pretty interesting day so far in the Canadian cannabis market. I don't know if you've been paying attention, but we have. And among the very interesting things that have transpired so far today, Tetro Biopharma has announced that it's going to take fentanyl on in a head-to-head trial for the treatment of pain. It has a new compound called PPP-001 that it says has the potential to become the long-awaited alternative to opioids for the management of breakthrough pain in cancer patients. So as a prescription drug, PPP-001 will be available as a prescription for and covered by insurance. In Canada, the opioid crisis is serious and growing and imposes devastating effects on families and communities. From January to September 2017, there were 2,923 opioid-related deaths, of which 92% were accidental.
Couple of interesting points on that. Just on the fentanyl side, what I do know about that is that one of the reasons why it's such a deadly drug or a deadly additive to boost the effects of the opioid drugs is that the molecules or the powder that fentanyl comes in doesn't mix very well, and the bad guys who add it to street drugs don't mix it finely enough so that somebody gets none and the next victim gets a hot shot, and then it's done. And that's why the fentanyl is so dangerous. I've also heard anecdotally that even here in Toronto recently in emergency wards that they are prescribing CBD drugs at the emergency wards, which was a revelation to me as well. I don't
here
have
locally in Toronto.
I don't have details, but I heard that firsthand. And if CBD products are being prescribed or at least discussed at the emergency level, that's another sign of widespread acceptance in the institutional medical community.
That's interesting that CBD would be being prescribed in lieu of opiates already.
Yes.
Even though before, the evidence has really piled up. I mean, I had no idea. Another news item today, United Greeneries has received its dealer license to allow for imports and exports of cannabis products and for the establishment of a product development platform. This is a wholly owned subsidiary of Harvest One Cannabis, trading under the symbol HVT on the TSX Venture. The dealer's license will allow the company to export its medical products to other markets with favorable medical marijuana regulations, including Germany. Fantastic.
It is.
And it allows the supply of their Satafarm products to Canadian and international customers. Good luck with that. Auxly, formerly Cannabis Wheaton, has announced that it has signed a definitive joint venture agreement with Peter Queering to build a state-of-the-art 1.4 million square foot greenhouse in Leamington. Interesting place. I didn't think there was any more room to build greenhouses there. I thought it was completely covered in greenhouses at this point. But so they've acquired 100 acres of land for the development of that, and they have an additional phase project contemplated that would see it go to a total of 2.8 million square feet.
That's huge. That's absolutely massive.
Unbelievable. It sort of calls into question the idea that there's going to be a surplus, or rather a shortage of cannabis once the cannabis recreational regulations kick in either September, October, November, December, or January, depending on when the Senate actually gets through their vote. It's interesting. So this week, they have to ratify or come to some sort of conclusion on those 40 amendments, most of which have been rejected, but there's still a few sticking points. If they don't make it to the end of this week without giving royal assent to the bill, then that means we're out for another month, and it'll be September before we actually can see that thing pass, which is kind of, I don't know.
It's so hard to know the wrestling match going on in the Senate, if it's just posturing along partisan or party lines, or if some of the senators are trying to be crusaders, and some still hold maybe dated views that this is still some kind of path and drug that they disagree with, and they're doing it on an individual, like a crusader basis, or if they truly think that they're adding value to the legislative process.
Yeah.
It's very hard to tell.
Yeah, well, it's interesting. It's certainly a political football, isn't it?
And we know that nothing gets done in Ottawa over the summer, so if they don't put it together here, it'll be interesting to see if there is back channel or power brokering going on behind the scenes in Ottawa in Parliament to try to, shall we say, motivate or enhance the efforts of the Senate, because this is such a key platform of the federal Liberal program.
Yes, that's true. There's some new leveraged marijuana ETFs on the way, which I thought was interesting. Horizons ETF Management Canada announced that they will launch 3 new ETFs later this summer to leverage the cannabis sector. The leveraged ETFs will also be known as double ETFs. They typically aim to deliver 2 or 3 times the return on their stated index and carry a higher risk rating than typical ETFs.
Yeah, there's a nice piece in the Globe on that today with more details on it for anyone that wants to dig into that. The leverage side, leverage is wonderful on the way up. No one ever complains about leverage on the way up, nor do they complain about volatility on the way up. Volatility only has a negative connotation on the way down.
Exactly. So there's the risk in that. Paris, France has announced that they are just opening their first marijuana coffee shops, but they're only selling low CBD products, low THC, high CBD products, and everything's coming from Switzerland.
That's kind of bizarre. I mean, you only need to take the train to Amsterdam the last 40 years if you wanted to participate. It seems a very, very slow foot-dragging process there, and I don't understand exactly, don't know why the Swiss connection is there particularly.
Interesting. So let's take a look at the cannabis index here. Let's see, we've got Emerald Health Technologies leading the cannabis index of large caps. That's all companies above $500 million in market cap listed in Canada. They're up 6.68% today. MedRelief is up 3.2% to $26.79 a share. CanTrust is up 3.14% today to $8.53 a share. And Canopy Growth up 3%, and once again has broken $40 a share, sort of establishing a new level in there. And as we can see by the position of the index here, it's kind of responsible for leading the entire index higher. But Aurora Cannabis is also up 8 cents today, or at 0.88%. Organigram is down slightly. Hydropothecary is down slightly. Supreme is down a little bit further, 2.5% to $1.58. And Kronos Group is down 3.75% at $8.98. Now,
before we leave the index here, James, I would say that on a loose basis, on a technical basis, you'd say that's a positive-looking chart because of the 2 bottom segments that have gone in there. I'll step into here for fun. This represents a pretty firm low, but it's always positive to have higher lows. You could also argue that some kind of pennant formation with a declining top and a flat bottom here broke out, and it broke out to the positive, to the affirmative. So this is actually possibly starting a new uptrend in the marijuana space. It also would reflect, because this is your largest cap index, it would reflect a growing interest in perhaps institutional participation in the marijuana space, both from Canadian institutions and perhaps international institutions. And that could be a very, very exciting trend for the upside in the marijuana cannabis space.
Sure, which I think is probably one of the greater arguments against the idea that the index is topped out, or rather the space is topped out and is now, sort of over full. I mean, Canopy Growth just joined the NYSE,
yes,
which essentially creates the foundation for a whole new level in the cannabis companies, especially the bigger ones, because now that it's on the NYSE, all these large institutional capital pools that have been restricted to just observing the market can now finally get involved and play ball.
You could also, it was only last August, so only 10 months ago, the Canopy's market cap broke $1 billion, and people thought, or at least it was sitting at $1 billion, may have broken it prior, but at $1 billion, there was a bit of a gee whiz wow factor of the valuation at that time, and here we are at 10 billion only 10 months later, taking it all to a new leg. And the big Constellation deal last early October obviously was a huge catalyst stepping forward with the whole sector, and we've always been wondering as a business, a consumer products business like this evolves, where are the pharma guys? Where are the beer and the alcohol, the tobacco guys? Are they, or the consumer products, Heinz and General Foods, and Kraft, where are they? Could they all end up wanting to come to this space? And they have more money than God.
Yeah, okay.
And the tobacco guys need a new story.
Yeah, well, actually, I saw a piece over the weekend that Philip Morris stated that they were definitively getting out of the tobacco business imminently. And there was some speculation as to how they would actually accomplish that, in that tobacco sales are still such a large part of their revenue picture.
Maybe they want to figure out how to leave the litigation and the lawsuits.
That's right. They want to spin that out into a new public company. You can just have the
whole business and fight over the scraps.
Yeah. The interesting thing about Canopy, which I just wanted to point out, is that Canopy's 52-week low was $7.73. So in the last year, this is a company that has gone up essentially by a factor of, 7 at least. So interesting times ahead. Let's take a look at...
I think it's also noteworthy, James, just to think about the sentiment last summer around the whole sector was fairly tame, if not a little bit negative bias, only that thinking that the play was over, that the good stuff, the easy money, people always say the easy money's been made. In my whole career, I never remember it ever being easy. But but in retrospect, they say, but that's because the retail investor had been fully invested, and there was no CIBC and no Bank of Montreal in there like they are now, and there was no New York Stock Exchange listing. All these things have come since the fall, and they've taken this to a whole brand new level.
You bet. You bet. We're going to show you now a clip of an interview we did earlier today with Nathan Woodworth, who's the CEO of James E Wagner Cultivation Corporation, better known as JWC, trading on the TSX Venture under the symbol JWCA. Hey, welcome to Midas Letter Live. My guest in this segment is Nathan Woodworth. He is the CEO of James E Wagner Cultivation Corporation, which we affectionately refer to as JWC for short. Nathan, thanks for joining me today.
Hi, James. Thanks very much for having me.
Yeah, so you had a auspicious debut on the TSX Venture last week. Saw a little downward pressure in your stock. Always happens when it starts to trade. But I wanted to talk today about the main differentiators in JWC's approach to cultivating cannabis relative to the entire universe of other cultivators. So tell me, what is the main difference in your approach?
Well, we're a technology company in addition to being a licensed producer of medicinal cannabis. And the technology at its core focuses on a technique called aeroponics. Aeroponics is a type of advanced hydroponic cultivation. Rather than suspend the roots in a substrate like rock wool or peat moss or put them in water, we hang the roots in an enclosure in the air. We then mist that root mass with a proprietary nutrient solution. This helps to maintain the optimized health of the plant.
Right, okay, so aeroponics is originally developed by NASA?
Well, originally it was developed by a researcher named Richard Stoner in the 1980s. NASA picked up the technology for a couple of key reasons. Obviously, when you're doing research into plants in space, it costs money to transport anything into space. When you stop to consider it, this is true here on Earth as well. Every bit of material that we use costs money. Aeroponics is very advantageous because there are no substrate materials used at all. So there's very little cost in transporting the requirements for the growth of the plant system into space. And of course, the same reflects in our facilities here on Earth. So in the 90s, NASA did a lot of research using aeroponics. At the time, they were looking at studying the root morphology of the plants. They wanted to see how roots grow in zero gravity and how that compares to how they grow on Earth. And so they used aeroponics to do this because they could maintain an ongoing visual record of the root mass. Today, NASA still uses aeroponics on the International Space Station. Right now, they're doing a study to look at the long-term effects of radiation on food crops. Okay. And again, they're doing this in an aeroponic style because of the economic requirements of growing plants in space.
Interesting. What is the net benefit of aeroponics in terms of yield and quality?
In essence, we maximize both because what we're looking at is a complex system in the plant. It's a system which has many and various requirements and input, and by optimizing the health of the total system, we optimize the output of that system. So our plants, when we grow a strain which has been grown in other environments, we expect to see an increase of between 2 and 4% in total cannabinoid count, which is the collected percentage of all of the cannabinoids present in the plant. We also expect to optimize over the course of a 4 to 6 month period toward the maximum yield, not necessarily of the weight of the plant, but the maximum yield of cannabinoids per square foot. This is a measure of the true efficacy of our productive system because it's the measure of the medicinal load that we can deliver to our patients on a per square foot basis.
Okay, do you have an idea as to what your actual cannabinoid output per square foot is?
Yes, you know, in terms of total percentages, which is how we're calculating it today, we're looking at a yield of approximately 22 to 25% on a basis of approximately 50 grams per square foot of canopy per iteration, and we expect to do that between 5.5 and 6 times a year, which gives us at an optimized rate of 22 to 25% cannabinoid count, approximately a little in excess of 300 grams per square foot per year. Now, some of our strains will yield more at a lower percentage. Our maximum yielding strain actually yields at about 66 grams per square foot, and we can do that a little over 6 times a year. So we're pushing well north of 350 grams per square foot on that strain. But that percentage is considerably lower, weighing in at about a 13% total cannabinoid count, primarily CBDs.
Interesting. Is there a benefit to medical standardization or the ability to deliver a medically standardized product as a result of aeroponic cultivation?
Both in aeroponic cultivation and in the technology that we've developed specifically, the growth storm production system, yes, absolutely. Being able to optimize the system means that we know that we're going to achieve the maximum yield and the maximum quality of product every time we grow that product. And the total system is designed to standardize that material. For instance, cannabis is usually what they call an apical dominant plant. It grows like a Christmas tree. If you measure the very top bud of that plant versus the bottom branches of that plant, you'll notice a significant disparity in the total amount of cannabinoids in that product. Now, this isn't advantageous to the end user. Person gets a medicinal product, they want a standardized dose per bud. And so we train our plants into a non-apical dominant format, which is a fancy way of saying we use a screen of green technique. And that way we optimize our production per bud and per square foot rather than producing asymmetrically distributed medicine across the plant.
Okay, so then what sort of benefit does that deliver to the economics of the enterprise as a total?
Well, we have a lower cost of input in our production system. By avoiding substrates, by minimizing the amount of nutrients we require for our plants, our overhead costs are reduced. We also try and limit the points of interaction for our growers with the plant. The point of the growth storm system is to convert an organic element into a component of a mechanical system. And by doing so, everything moves like clockwork, which means there's less individual care required from our growers to our plants. Instead, they manage the total system. So we attempt to keep costs down across the board, which helps us deliver some of the best product in the industry for an average price of a little below $8.50 a gram. And we also offer discounts on volume because we want our patients to not only use our product, but use as much of it as they need to treat their condition.
Sure. You say $8.50 a gram, that's your average selling price?
I believe so, yes. Yes, okay. Obviously not our cost of production.
Right. Do you have an idea of what your cost of production is at this point?
At this point, it's around $2.50 a gram. Now, that's out of our pilot facility, which has taken a lot of development to get there. And of course, at that scale, there's a lot of additional overhead. Management firmly believes that we'll be pushing down toward $1 a gram by the time we're at full-scale production at our second large-scale facility, a 345,000 square foot expansion in the Lear building, or the old Lear building in Kitchener. It's now the JWCA building.
Oh, interesting. Okay, you describe yourself as a technology company. Should investors read into that there is a potential or an imminent revenue stream coming from some kind of technology relationships, vending of licenses?
Absolutely. We're actively pursuing a variety of strategies in this regard. We firmly believe that the growth storm system, which is patent pending on a number of key technologies, is the best system for cultivating cannabis in the world. And eventually, I believe that these technologies that we develop will play a larger role in agriculture in general. So I think that the future of JWC definitely holds a lot of opportunity in terms of licensing these technologies, creating technologies for home use, and developing a suite of secondary innovations, which a number of them hopefully will be deployed this year to begin to make a larger impact on the market in general.
Interesting. So then is JWC more or less positioned as primarily a medical product provider, or more so for the recreational market, or equally both?
I think we're going to let the chips fall where they may on that one, James.
Okay.
You know, in the end, I am a medical patient, and I have been for well over a decade. So it's vitally important to me to maintain a relationship with our patients that gives them the impression and the understanding that JWC is concerned about their health. I'm never going to abandon the patients who sign up with us. That said, the recreational market is very important as well. And at our new facility, we're going to produce a lot of very high quality cannabis. And I think everyone in Canada deserves the opportunity to try that product. So I'm excited to be involved in the recreational market. Where those percentages end up, how much of our product is dedicated to one market or the other, depends on demand and supply and a number of factors, which at the current point in the market's development simply haven't been defined.
How are you going to market your product? Are you, for example, do you have patients now? Are you selling medical cannabis on your website? Do you have relationships with any other vendors?
We have a number of patients already signed up and are buying product. We're registering new patients all the time. I think patients in Canada are excited about the concept of aeroponic cannabis, and so we have no shortage of people on our waiting list. We hope to get to all of you very soon, and so there's an ever-increasing demand in that regard. We are also looking to begin selling our product through Canopy's Craft Grow outlet. We have a great relationship with them, and we're very excited to be a part of it. We're just working out some of the final details, and we hope in the weeks and months to come that that product will be available there as well.
Sure. Canopy Rivers, the investment arm of the Canopy Growth, made an investment into JWC, if I'm not mistaken?
Absolutely. We are one of their first investments and one of their largest to date.
Interesting. What percentage of the company do they have?
I believe at this point it's 14.6.
Wow.
Although I probably should have stopped at 14 just for fear of being inaccurate through too much accuracy.
Right. So then I guess that puts you in a sort of favored position in terms of access to the Tweed Main Street outlet as a sales venue.
They're excited to have our product. We're excited to be a part of it. Certainly it's a relationship which we're definitely going to pursue.
All right, Nathan, let's leave it there for now. We'll come back to you shortly and see how you're making out. Thanks for joining us today.
Terrific. Thanks a lot, James.
Aeroponics, what do you think of that?
It looks, I mean, to what I know about it, I'm no expert, it looks like a fantastic way to grow a variety of things, including cannabis. It's as clean as can be and organic, and obviously they're leading the way.
Yeah, I think there's a lot of potential in JWC. I think it's going to take a while for the market to appreciate the economies of scale that are offered by aeroponic grow spaces, the control over genetics, the consistency of the product, the modularization of the growing environment limits the downside from the event of crop failure. So we actually have a video of JWC's growing operation from Midas Letter Films that will be published tomorrow or the next day. So that's something to keep your eye peeled for. We think it's the best video we've ever done. In about 10 minutes' time, we're going to be joined by Jason Spatafora. He's the Wolf of Wall Street. He'll be joining us via Skype from Miami, Florida. And we're going to be talking about the Green Organic Dutchman, TGOD, on the TSX, which today is one of the highest trading stocks by volume. Now, the Green Organic Dutchman is remarkable in many respects because it has achieved a market cap as of today in the $1.5 billion market cap range. The company has no revenue to speak of. They will not have significant operations until later this year, but they've still managed to achieve this market cap, and they've done so by doing private placements to the retail audience and getting all of their shareholders to agree to be locked up 6 months from the date of trading, which puts them more or less at November 1st until those shares start to become free trading. There's been some criticism that the shares or the company runs the risk of being subject to a high degree of selling at that point, and Jason Spatafora, who is a shareholder of the Green Organic Dutchman, knows far more about the company than either Steve or I, is going to enlighten us as to why we're not getting the point. So we'll be looking forward to that. I just wanted to touch base quickly again on James E Wagner Cultivation Corporation, JWC, currently trading at around 94 cents. The company started trading last week at $1.15 and was promptly beaten down by, it looks like, around 1.8 million shares of selling. But that's part of what can happen when the company starts to trade some free trading shares in the hands of individuals who might be looking at a profit, will be eager to take that off the table, and will not be interested in waiting around for the upside. So, Stevie, what do you make of all of the cannabis stocks right now in terms of that? We looked at the index. You say there could be a new level higher, and you made mention of the fact that last summer it looked like there was a broad-based abdication of interest in the sector.
Well, I think to that point there was significant saturation of the retail sector, and that whole activity in the fall just created a brand new leg up, and I think there could be serious upside legs and profitability on the future as the U.S. becomes into play. I mean, Canadian banks now, CIBC and Bank of Montreal, are underwriters. That's a brand new thing starting in January with BMO's involvement with the placement or the raise for Canopy. Where the other Canadian banks, they will follow suit because they will not sit there and watch fees and a new business segment with great future to be owned just by two Canadian banks. So what does it mean when the American banks, who are much, much bigger, and the global banks decide that they want to lend to this business, that they want to underwrite this business? I think that could be a huge, huge leg up down the road because they have to cross that line. I think an interesting analogy is when online gaming came out maybe 15 years ago, and the big multinational American casino companies fought online gaming like mad because they thought, well, no one will ever come to Las Vegas again if they can play for real cash poker at home. And they fought it and they fought it, and then they realized, no, you're training, you're educating a whole generation of brand new poker players who love the game, and that they actually may want to come to Vegas more. So, you had that complete flip from fighting it to then adopting it and then becoming a major player. We've got the same possibility on the cannabis space where, again, the pharmas and the distillers and the beer companies and the juice companies and the beverage companies all have been fighting it because they didn't think they could take their shareholders on that route. Well, once that line is crossed, once the credibility and the acceptance is there, and it's happening more and more each day, country by country, Canada's clearly blazing a trail. Once it opens the door in the U.S., again, could take it to much, much bigger levels.
Sure. John Kim, a viewer watching on Facebook, would like to know, when do you think Bill C-45 will fully pass? He says, I know the government is thinking August to September.
I'm not as optimistic, but I'm no expert on the political process. I just don't think much gets done in the summer, and that's perhaps a little skepticism on my part. I think Ottawa is pretty well closed for the summer, so I think if I was going to be a skeptic, I'd say on a Friday afternoon of a long weekend in August, maybe they'll slip out an announcement to say they're not quite ready for the end of September.
So and this is the...
But that's clearly a wild card.
Right. This is the last week that the Senate is in session before they break for the summer break, which puts them back in the Senate in September.
Yes.
So if they don't actually get through this thing by the end of the week, then we're looking at September before it even finishes. It gets royal assent from the Senate at the Senate level.
See, that's where I think the behind-the-scenes bargaining, the virtual cliche of the old way of the backroom, smoky room deals are getting cut right now. I think that's going on after the Senate debates are over at night, at the dinners and at the meetings, to try and get
bunch
this
of horse
done.
trading.
I believe that's happening because I think it's a big deal for the federal Liberal Party to get this through. And obviously there's a huge stock market in support of this. I don't think if it gets delayed, I don't think it's necessarily bad for the stock market because we're only talking probably months rather than years, certainly not years, and everyone knows what the opportunity is down the road.
You bet, you bet. Okay, so from where you sit, I want to talk for a sec about the Canadian markets generally again. And the fact that the cannabis trade is having on them. I mean, the TSX Venture has been sliding steadily for since January. And typically the TSX Venture is dominated by commodity companies, or rather resource companies, oil and gas, mining, and stuff like that. And so if the onset of recreational rules were to have a calming effect on the markets for the cannabis stocks, do you think that the Canadian capital marketplace generally would suddenly find itself in full decline?
No, I don't think so. I mean, there are several phases. First of all, I think there's if investors are buying the cannabis stocks and they're used to them going up every week, you then can say, well, first there's a little bit of there would be a buyer strike where they say, well, I have enough on my portfolio, so I don't want to have any more. The next phase would be buyer's fatigue, where people are maybe watching their stocks go sideways. I think we had a little of that last summer.
Right.
But I think we saw a little bit of the quietness last summer, which we alluded to earlier. But any event on the positive side can change attitudes overnight. Another takeover, and we're still in the takeover mode where the large caps, we saw how strong the large cap index, and maybe they're buying some of these smaller companies and those shareholders are willing to sell. So those types of catalysts are so hard to predict, can have such a positive influence on the market suddenly. And I think there's so much room for continued consolidation in the space. The issue of it's going to be cheaper to maybe buy something strategically than to build it, both from a cost perspective and also from a timeline.
Okay. Let's ask somebody who's very active in the cannabis space. We're joined now by Jason Spatafora, better known as the Wolf of Weed Street. Jason, thanks for joining us.
Hey, James. How are you?
We're doing great, thanks. Jason, you're a shareholder of the Green Organic Dutchman And some of our subscribers have been asking about the long-term prospects for the Green Organic Dutchman, in that, you know, they raised a whole bunch of money and tied up retail shareholders until November this year. Some critics suggest that a lot of that stock is going to come out into the marketplace in November, but supporters say that the company is building and backfilling the value and there's a lot more to come. What do you have to say about that?
I think that anybody that thinks that the market is just going to dump in November is an idiot. I really have no problem saying that. You know, you have to look at this, you know, you got to look at, Canopy is a really good example. So I know people that participated in the PP for Canopy and went 100% and were like, great, I'm crushing it. And they look and, you know, now they can't even look at it. You know, now you're talking about a stock that has gone up, you know, 10,000%. Not that much, but you get it. It's like double unicorn. So yeah, I think that people need to look at kind of the history. I mean, I always trade the history of these stocks, but you know, Canopy and Aurora are really good test, I guess you can say. You know, they paint a pretty interesting roadmap. So you have to consider when Canopy first went public on day one, it lost 42% of its value, went sideways for like 6 months, and then, you know, demonstrated that they had cash in the bank. And the same for Aurora. Once they showed that they had 80 million plus in the bank, that's when those stocks started to react. TGOD is coming out of the gates with a lot more money in the bank, fully funded, you know, probably with the exercise of the $7 warrants and the $1.15 warrants, you're probably looking at somewhere estimated $320 million. That's a hell of a cash position. And there's a reason that companies like Aurora took a big stake, and companies like Eaton Energy, you know, gave their blessing to form this strategic alliance. But to that point, you know, let's look at the Aurora entry, you know. So everybody thinks that, oh, you know, first off, the people in the United States that bought the $1.65 round, they'd be dumb if they sold. So they're dumb because you're talking about short-term capital gains. The that subscription closed on January 1st, so they have to wait till January 2nd to get long-term capital gains. So why, if everybody's selling, are you going to take an extra 20% penalty from the IRS? So that's first. Second, you also have to look at how much Aurora put in and how much they bought. So I think in the last round, they bought something in the neighborhood of 55 million shares. Those 55 million shares are not coming out. Then you have to factor in all the insiders, affiliates, and people that are locked up. You know, CEOs locked up for 42-month escrow, options vest in 36 months. So the supply is a lot less than what people think. And that's usually, you know, when people say that to me, that's usually the first thing I'll tell them. For myself, I don't want to be in the boat of, hey, yeah, I sold this, I made 100% profit. And look, you get in this to make money. I mean, you know, nobody goes broke taking profit. But I also don't want to, you know, see this thing just run because, you know, they're better positioned than really any cannabis company has ever been out of the gates.
Okay, interesting. Now, I think it's important to disclose here that you're a shareholder in the company, right?
Oh, yeah. Look, I've got a monster position. And my wife was actually really pissed at me because it went public and I was like, oh, I got 100,000 TGOD. She's like, dollars? And I was like, no, shares. And she's like, why? And I was like, I really didn't think I'd, you know, I'm like, either people aren't getting it or what? I go, but this is a really good value. You know, when you look at funded capacity and comparables to Afria, Aurora, Canopy, then, you know, it was just kind of a no-brainer. But yeah, I've participated in all the rounds. And I disclose my position. If I ever write anything on marijuana stocks, I disclose my position. I think as of today, I've got 126,500 shares that I purchased in the open market. So yeah, I'm a big shareholder, I guess.
You got skin in the game. That's always refreshing to see. Do you think that the cash position of TGOD, and it's obviously going to be has an ability now to execute on all the things that it's put in motion, the new grow facility in Valleyfield and everything. Do you think there's any risk whatsoever that the company is, by the time it gets everything up and running, might be looking at a market that's in oversupply in terms of cannabis in the Canadian context?
No, not at all. Okay, and I guess here's why. So you've got, how many LPs in Canada? Like 60? Something like that?
No, there's 100 now.
Okay, 100. How many of them are organic?
None. Maybe 2. 3.
Okay, so, with the recreational market, you're going to see, we're going to see this in dispensaries. We're going to see it here. We're going to see it there. You're going to have all of those LPs fighting for, what I call shelf space. The organic market, nobody was set up for it. That's why Aurora came in. They took their position in order to be able to capture at least 20% of TGOD's output. Organic has a 30 to 50% higher margin, depending if you're talking wholesale or retail. And, with respect to medical marijuana and insurance companies and everything like that, if a patient could get their marijuana, they don't want something that's been, had pesticides or herbicides or, anything that could potentially be carcinogenic or whatever. Who knows? They want something clean. And I think insurance companies also look at that and they say, well, we want to mitigate risk. We're already allowing cannabis. We need it to be the safest cannabis out there. So I don't think that hurts TGOD, but I also think that they've also prepared for this and the consolidation in the markets you've heard so much about, which is why they brought on so many guys from COT beverages, because, if you look at it's like their upside down pyramid, which I'm sure you've seen. Cannabis is at the very bottom. And at the very bottom of that pyramid, you're talking at full capacity, 116,000 kilos, or 130 now if you count Jamaica. You're looking at, almost $1 billion in revenue just from flower. But if you look at the top of the pyramid, it's consumer packaged goods, with respect to beverages, which is why they went so heavy on guys that have already created a multi-billion-dollar company.
Jason, it's Steve Misener. Pleasure to meet you online today.
Hey, Steve.
I noticed that that it came out just recently that the DTC was available for the shares in the U.S. to enhance the exposure, or at least the availability to U.S. investors. How do you see that maybe unfolding for this name and some further Canadian cannabis stocks in general? What do you think how do you see the U.S. appetite at the retail level evolving?
It's very strong. Every company, our clients and everything, I always tell them, especially if it's a new offering, you've got to be DTC eligible. It's you just need it. For whatever reason, it's cleaner and it provides that level of oversight, I guess. People have a better understanding of what they're buying from a capital structure standpoint. But the appetite in the U.S., it's just getting bigger and bigger. Every time one of these companies goes to a big board, that money is piling in. And for a long time, the U.S. market was supporting the Canadian market, and now it's kind of flipped to this weird level. But as for myself, I think I own maybe one company that trades on the OTC. So U.S. investors definitely know, their appetite is really in Canada just because of the regulatory standpoint, and they view, or smart money views, the global blue sky of the industry.
Yeah, do you think that when the U.S. goes federally legal, that the quality of the publicly traded marijuana company in the U.S. will then go up because a higher quality of investor will be there, and therefore the public company structures will improve, and that will attract more, maybe even more global investment towards the U.S. at that point as we see more NASDAQ and NYSE listed companies?
I mean, you have to look at it like this. It's going to attract people from both ends of the spectrum, the good ones and the bad ones. You know, it's kind of like cryptocurrency. Everybody's a crypto stock in December. You know, we saw the same thing in January of 2014 once Colorado went legal. But, you know, at that point, you are going to see a consolidation in the U.S. market because at that point, you don't need to be this startup. You don't need to be something that's got a lot of convertible debt and just toxic debt. You know, it is going to attract a lot of money, but I think it attracts more money on the private side. And basically, a lot of these OTC companies that have been trying to make it for the last couple of years are just going to get clubbed like a bunch of baby seals.
Okay. Do you see any companies in the U.S. that are what you would call investment quality? And, you know, let's not talk about MedMen at this point. We've beaten them up enough. But there are some bigger private enterprises in the U.S. I've become aware of who look like, you know, they've got kind of the profile of a big sort of horizontally integrated Canadian LP. They're not public. It doesn't look like they're coming to Canada, though who knows, they can go public here anytime. But it strikes me that there are some really high quality enterprises coming together in the United States that are just waiting for deprohibition at the federal level so that they can breathe a sigh of relief and say, hey, let's just do it and risk being clubbed like a bunch of baby seals.
Well, look, there's good company. I mean, a really good company in the United States is Kush Bottles. You know, they don't touch the plant. You know, it's just an ancillary service. You know, they make bottles and bags and everything for the industry. I think that's a great company, and their revenues just and growth demonstrate that. You know, but to your point, you know, I think that, you know, like the companies that are in the United States that want to get into the Canadian market, they're already getting in the Canadian market. So what I think you see coming out of Canada, especially for some of the public companies, is they're going to have deals with consumer brands in the United States. Call it like Chiba Chews. You know, a Canadian company can't own anything in the United States, but they can license it. So there could be a licensing deal, and then part of that structure is if it goes federally legal, we've got the option to buy, you know, here are the terms. But in the interim, let us help with your global reach, and let's create some of these consumer packaged goods. So if people on Twitter, you know, if I put CPG, that's what I'm talking about. Because at the end of the day, it's not going to be the flower that's going to be valuable. It's going to be these brands that are created. It's going to be the Coca-Colas and the Snickers bars of weed. And companies are already doing that. You know, we just saw in the last week, Aurora take a sizable position in Choom Holdings, which, and full disclosure, Choom is a client of mine, but they get it. You know, like if you've got a product that has brand awareness and you think that it could do fairly well in not just a Canadian market, but a global market, yeah, people are going to invest in it. So I think the companies that are preparing for that and then planting flags throughout the supply chain are going to be the ones that are, you know, the Amazons and the Starbucks of weed, so to speak.
Right. Okay, so interesting. A couple of our subscribers are asking, they want to know if there are other newer companies that are newer to the market that still have a lot of opportunity in them, like TGOD, like Choom, that you might know about that possibly aren't being discussed generally at this point.
Ianthus is one in the United States. I'm really just starting to take a look at it, to be perfectly honest with you. It's really tough in the summer. I think that, especially new investors, you need to realize that there's a seasonality to pot stocks. And typically I think that, and I've been pretty vocal about this, that the season is really from October to March 15th. I always see everything just kind of going down. Right now is when you can get those value positions. This is the time when your due diligence really matters. Because, like last summer, I bought Aurora for $1.61, and I was just like, holy shit, $1.61, I couldn't believe it. And people were buying Canopy for $7 and everything. So, I don't really want to single out any one company. I'm pretty vocal about who I like and who I don't like. I think they have to be careful. You don't want to chase hype and everything, because after C45, it's created this kind of shift in that you've got to be a real company. I think you've got to be a licensed producer. Like if you don't have your license, my opinion, which I'm sure a lot of people don't agree with, I just kind of think that you're dead in the water unless you've got some kind of products and, you could kind of float yourself until you get a license. Because like anybody that gets a license now is still a very long time away. And then companies like TGOD and supplying the market, we're going to see a consolidation in just price. The reason that TGOD is so attractive is because, they're going to be getting their energy for 75% less than what everybody else is, which is a huge advantage. So coupled with that and then a higher margin, it's kind of a no-brainer. And, I think that's why you're seeing companies like Aurora and Eaton that have come in and formed these partnerships, because at the end of the day, there is going to be this price consolidation, as just, from a flower standpoint. I'm not even talking from a stock standpoint. And the companies that are going to survive are going to be the ones that are the most efficient with their energy, with their capital and everything in between.
Yeah. Okay. Jason, one of our viewers on Facebook is asking, when would you sell Aurora?
I wouldn't. Not now. Okay. It's really easy. Take a look at a 3-year chart. Okay. Or let's start at 2016. Let's go from October 2nd, 2016. And, if you look at it, you'll see, and this goes for Aurora, Canopy, and every dog shit stock out there, they're always hitting their highs in December, January. I mean, it's just a fact of it. I'm not Nostradamus. I just take a look at patterns. I've got a little notebook. I scribble down, hey, this is what it did on this day when the market was closed in Canada. So, I think that you're going to see a lot of new all-time highs in December, January again.
Jason, I wanted to ask about what you think might be the commoditization price band for maybe the raw flower. And I don't know if you have to choose a state just for example purposes, but do you think there will be any sort of flatline pressure for raw flower, or maybe that's already taken place, that makes it maybe more attractive for processors to buy flower?
Are you talking about
to do the value add?
In the United States or Canada?
In the U.S.
Man, the U.S. is crazy. What people are getting just for trimmings is nuts. So yeah, I think California, the price is going down. Vegas, I think the price is being manipulated. Colorado, it's a little bit more of the same. It's all over the place. But from what I understand, and I've got investments in private companies in Nevada, and from what I understand, like the price for trimmings, to create all of these products, the edibles, the gummies, and everything else, is just like through the roof. So it's like this whole sub-market of trimmings. which is, really interesting. But, I really don't, even though that I guess I've got ownership in a grow, I'm mainly focused on the public side because that's the easiest exit. Even on the private side, like the exit's a lot different. So,
you're invested in a actual growing operation in Florida?
No, not Florida.
But Nevada. You're based in Florida?
Yeah.
Whereabouts do you live?
Fort Lauderdale.
Fort Lauderdale. Okay, I was close. I said Miami. So tell me about your private investment in a grow up. That's interesting to me because so is it in a state that's already legal, or is it in a state that's coming legal?
No, it's a state that's already recreational. It would be Nevada.
Okay.
And so what happened in Nevada was, so it's crazy because a couple years ago, nobody could get money for investment into Nevada. You were like trying to get all this money in. And then when they had the licensing process, they basically opened it up to everybody. And like every Yahoo and their mom got all these licenses. And the way that the state had it set up was, okay, you had to buy the land, you had to show the building. It's a lot like, the Health Canada process. So what a bunch of guys from New York did was they came in like venture capitalists. And they said, okay, hey, we'll buy the land, we'll build the building. You're responsible for X. You've got to raise this, raise that. And, or we're going to end up taking it from you. And so that's exactly what happened in Nevada, essentially.
So if you couldn't actually get into production and get a product out the door, they took away your license?
Yeah, pretty much.
So is Nevada one of the states where there's an excessive supply that's threatening to drive the prices lower and put a bunch of growers out of business?
No, not at all. I think Nevada is the best market in the United States. You're talking about a state with 40 million tourists a year. I think California is just kind of a shit show. I think there's too much. And when people start asking me, they're like, hey, I want to grow in Canada, in California, it's too late.
Mm-hmm. How do you feel about some of the other states that may have been, they're behind the curve? Are there other states that you think are looking attractive on an individual basis, just on a big macro basis?
Yeah, I think Florida will be great, especially if we ever go federally legal. Just because it's kind of the gateway to the islands and South America and everything else. So geographically, it's just in such a great spot. And then going back to the Nevada model, it's got a lot of tourists and a lot of people that just like to smoke weed because they're basically living here and on vacation as it is. I think the state kind of messed up at the beginning because you weren't able to smoke the flower. Now they've just overturned that. And I think that they had to overturn that because, the way that Florida worked is they gave out 7 licenses and they didn't even give them out. You had to bid on it. Actually, we bid on one in Jacksonville and got outbid. So these companies that got licensed, and then all of a sudden you can't smoke them. So yeah, I mean, climate-wise, it's great. I think the only real risk is hurricanes. But yeah, I see it as, there's a lot of, the Port of Miami, in terms of like tech coming in. And let's talk about vape pens and everything. It's an easy choice. Like if I had to pick anywhere where I would have a grow, and then send it around consumer packaged goods and everything, with the ability to ship internationally, I mean, Miami would just be great.
Okay, great. The incredible irony of the days from Miami Vice in the 80s when the bales were being dropped in the Everglades, and now you're suggesting the bales will be going out to the islands in South America. The irony of that is unbelievable.
Yeah. All right, Jason, Thank you so much for your participation. We got to leave it there for now. We'll hopefully come back to you as soon as possible. Very insightful. Thank you for your time.
Thank you. Have a good one, guys.
You too.
Thank you.
That was Jason Spatafora. He is better known as the Wolf of Weed Street, and you can find him on Twitter under @WolfOfWeedStreet. If you want to follow or get alerts, rather, there's a few of the comments have suggested that they'd like to know when we're going live. All you need to do is click on the subscribe button on Midas Letter or the little bell that it represents the alert, and you will get a notification every time we go live. Same thing happens on Facebook. You just got to hit the subscribe button. We're going to wrap it up for today. We hope you join us again tomorrow. This has been Steve Misener and James West for Midas Letter RAW.